let's get in P Phani Sekhar on the show as well, we'll talk about the markets at large in a bit. But there are some of these specific names that deserve and mentioned right at the start of the show. E. Johnson to speak about the fundamental end of the market. Phani, really good having you. Thanks so much for joining in. Just a quick word, Phani, since we are on the topic, I don't know whether you can individually comment on a Glenmark or no, but what do you make of this piece of news? Because it's clearly impacted the stock in a big way in the session today.
Unfortunately, can't comment on it since we hold it in our portfolios.
Okay, but but how bad could this news be? I'm not asking for a stock recommendation about a price or something, but is Zeta-Met a relatively large portion, and can it have a further impact on Glenmark? Can you speak about that much at least?
I think it's a temporary setback,
okay.
Although the legal recourse is available. But I feel from a portfolio perspective, I don't think it will materially impact the company. From a sentimental point of view, since the overall markets are weak, you can expect a little bit more pressure on the stock. But other than that, from a medium to long-term point of view, I expect things to be reasonably good.
Okay. Fair call. Phani, would you be able to comment on the companies which have been impacted because of the reallocation of coal blocks? I would probably think of two. And I don't know whether you cover Usha Martin or not, but certainly you have a thought on Jindal Steel.
Well, there was an aberration in trend, considering the prices at which couple of these coal blocks went. Considering that the quality of coal out there was rich, and one expected the government to move in some way or the other. If it were not to be a government, I would not have been surprised to see maybe a public interest litigation. So some action, I think, would have happened, and to that extent, considering the larger environment we are in, I guess the government played safe and moved proactively. And since this case is likely to, receive judicial scrutiny, I guess whatever happens from here on will be dependent on what the Honorable Court says. But other than that, it's a temporary setback for these companies because it was a very good deal that they got. And let us see what happens from now on.
Okay, wait and watch. We'll take a break on that note, but as we do so, speaking on the trends in global equities, Mark Farber, editor and publisher of the Boom and Doom report, says there is a shift in economic power from the US, Europe to emerging markets actually. And within EMs, he prefers India as an investment destination.
GDP figures in India are actually overstating economic growth significantly. Doesn't mean that he's bearish about Indian financial assets. I'm also positive essentially about Indian assets. But growth is not what the government is publishing. The market is actually taking off after 2013. And I think the bull market could last longer. That doesn't rule out a meaningful correction. I would rather invest in India than, say, in the US. But I always advocate that I also own gold and I own real estate. I think that investors will make more money in emerging economies than in the US. I believe that geopolitical problems are here to stay. I also happen to believe that the Middle East will blow up. And whereas everybody was very positive about oil when it was trading around $100 a barrel and above, the same analysts now all think it will go down to 20. My guess is that the price of oil has an equilibrium price of between $40 and $60, and that it will settle around that level eventually.
All right, back with closing trades and interesting conversation in the break with P Phani Sekhar, and we'll chat about that on air too. But I just want to point out the CNX mid cap index is now down about 0.9%. The small cap index is 0.7% off. So it's the broader markets which are feeling that bit of pinch. Look at the falls. Amtech India is down 9.5%. At 41, it's very close to its 52-week low, and this is a stock that actually went up all the way to 140 odd midway through the year when that auto component boom was at its peak. So that one has come off quite substantially. KPIT Technologies gave that bit of a false recovery move in Friday's session and back to losing 6% today. So now at 179, this one too is trading at the lows of the last 1 month possibly. And then there are stocks like HOEC, Rallis. We already discussed Glenmark at length. So the broader market is feeling a bit of a pinch, and the FNO side too, the liquid universe, is actually not doing too well. Glenmark is essentially a large component of some of the top losers in the FNO space as well. Actually, speaking of FNO, let's get in Bhavin Desai, Senior Manager, Equity Derivatives at Motilal Oswal Securities, joins us right now on the show as well. Bhavin, good having you. Thanks for joining in. How are you approaching the expiry right now, Bhavin? Any strategies? Essentially the levels that you'd watch out for the Nifty and the Bank Nifty, and if there are any strategies that you're deploying.
Well, good afternoon. Well, not so good afternoon.
Yeah.
Could have been better if we've had 50, 70 points gain on the table. Anyways, we are at a juncture right now as far as Nifty, Bank Nifty, both of the indices are concerned, and many of the heavyweights are concerned, where we're too close to the nearest congestion zone. So if I had to talk about Nifty, then 8500, the entire globe now knows that 8500 is a lower bound. Since last couple of months we've not broken it, and chances are that we might just hold it. Having said that, similar setup seems to be playing out as far as Bank Nifty is concerned. Here the levels change to 18500. Particularly if I had to talk about Bank Nifty, then you have 320 put heavily written in ICICI Bank. Trade is not expecting an expiry below that. 280 put written heavily on State Bank of India, not expecting an expiry below that. So somewhere we are around that particular level where everybody is enticed to buy and just hanging on to see that the moment we see Nifty around that 8500 level, or these particular stocks actually giving maybe a couple of upticks, and we'll go ahead and buy. So that is the kind of mode that we are in. So what we are advising our clients is that at least reduce as much of leverage as you can, because this is a pivotal level. You can go either ways with vengeance, and considering it's the week of expiry, the unwinding will actually add more fuel to the fire. So considering that, as far as Nifty is concerned, about 8550 put can be went long on. It's a dismal value, but can make wonders if Nifty manages to see the other side of, or the negative side of 8500. There is decent enough room open for you to materialize the hedge. On the Bank Nifty side, on the other hand, a simple 18500 put can be bought, and 18,000 put can be sold. 18,000 is the level to which we see the room opening if we see sustaining Bank Nifty sustaining about 18,500 lower. So about 100 rupees worth of outflow it is. So about 2,000 rupees worth of stop loss, and about 5,000 rupees worth of absolute profit target can be worked out on Bank Nifty hedge.
Okay, so that's the Bank Nifty hedge that Bhavin Desai is recommending in the session today. That aside, the other one that is interesting is Bharti. And you are clearly not playing Bharti for the expiry. It's for the April series, Bhavin.
The fresh a sector for a long unwinding setup to be started into, and that is telecom. Not a lot of other stocks are showing those kind of signs, but at least as far as the top movers are concerned, Bharti and Idea both are showing long unwinding cycle. So it has been through a bit of an unwinding, and chances are that we might see once again it regaining the momentum. 360, 370 is a heavily put written area. So once again taking a very a nimble footed approach, and going long on a 390 call here, and simultaneously going short on a 410 call. This is basically a bull spread, giving you an opportunity to trade with a limited profit, but then stop loss can be kept at about 2,500 rupees in terms of absolute money, and 6,000 rupees worth of absolute profit can be kept in mind as a target.
Okay, Bhavin, the market is stepping lower a bit at least. So we are around the 85.50 mark. We went below that also for a brief second. But, pretty much trying to defend ourselves at that level. The broader indices have come off a bit more. Before we let you go, quick strategies on NTPC, Hindalco, even for that matter, JSPL?
GSPL is one of those, one of those firecrackers that the kids are asked to stay away from. So I am going to be that obedient kid, and I'm going to stay away from it at least for the week of expiry. In the metal space, if you're looking for something, a little lucrative than that, then Hindalco is something that you can think of. Hindalco 130 is a heavily put written area, and that is above the lows that we've made. So somewhere there is a feeling that in next 3 days chances are that a short covering rally might be in the offing. So that entire unwinding thing and the option setup can be utilized for creating a trade. I'm just asking to do a very simple, very conservative trade whereby you go long on 135 call, simultaneously go short on 140 call, 2 lots, and to cover yourself for that extra call short by 145 call. So it's called a butterfly basically. 135 call long, 2 lots of 140 call short, and 1 lot of 145 call bot. The entire thing costs you just about 80 to 90 paise, and if we end up at 140, which is the expectation on the day of expiry, then you make 4 rupees. So it's a wonderful deal with 2,000 lot. To about 2,000 rupees worth of stop loss and 8,000 rupees worth of target is a decent risk reward to be played with.
Okay, Bhavan, we'll let you go at that. Thanks very much for joining us and giving us an insight into the futures and options side of the market as we step into expiry session on Thursday. MRF, and they're looking to invest about 4,500 crores in 2 plants over the next 7 years. Already a very expensive stock, down 2.5%. And we've already seen, some of the tire majors do their bit over the last couple of weeks. Of course, that import duty alert on rubber price, the commodity essentially, brought about a fair amount of nervousness in these names. But for now, MRF, given the weight of the market, is a bit weaker. Let's get in ideas at 2:55 from both Ashwini as well as Sandeep. Ashwini, come to you first. What's the call that you would make?
See, first of all, let me clarify that we have booked shorts on the March series. What happens in a downtrend is towards the expiry, generally the market makes a low on Monday, and from Tuesday onwards there is some sort of short covering rally which happens. And because April sometimes in the bank nifty is not so liquid, so people can get lose out on profits if they keep holding on, unable to take it forward, and unable to book out. So today is the best day to book out on a bank nifty because 8500, 8550 chances are will lead to a short covering rally. Having said that, Amtech Auto is a sell with a stop of 142, target of 125.
Okay, Sandeep, what about your idea?
Tanvir, a sell in a Kane India, stop loss 222, target 210, and a sell in Apollo Hospital, stop loss 1385, target 1320.
Well, if Kane India does hit those levels, then that's a fresh 52-week low for that one, which is just about a couple of points away from there. And with crude not showing any signs of a bounce, this one could well continue the drag lower, coupled with all the problems that Kane has. So 10% down. YTD, and a large portion of that fall, actually over 10%, has come in the last 15 or 20 trading sessions. So it's not been a very happy last 1 month for Kane India. Save for the bit of a bounce that came in, dead cat as I would call it, it has been a downward journey for Kane India in the session. Actually, before we take that break, funny, for a lot of people who would think that is crude bounce, bottomed out, and therefore do you make an investment in Kane because it's trading at fresh 50 lows, this, that, etc. Is that all rubbish? Is that argument out of the window for now?
For now, yes. But the best thing with Kane India is it doesn't have a bad balance sheet. It has a good balance sheet. So when you play commodity-based stocks, you look at 2 things. One is what is the outlook of the commodity over the near term and medium term, because there is no long term for any commodity. And 2 is whether the company in which you invest will survive over the near to medium term. Now, Kane certainly ticks the second box. It doesn't have a stressed balance sheet. It has a good balance sheet, a lot of cash. However, what is impacting the stock in the near to medium term is the outlook on crude. So if you can bear the near-term to medium-term pain, I think as and when crude bounces back to $70 and plus, or whatever time frame, 1.5, 2 years, I think Kane should be back in business.
Yeah, the only point is for somebody who is not a fund and can invest in individual names as and when he wants, maybe sitting on cash versus sitting on Kane could be a better tactical strategy. You might be able to buy it maybe slightly lower or maybe 5% higher, but at least the time value of money will probably not get eroded, because for now it's anybody's guess as to when crude will make that bounce. So just keep that in mind. However, that advice is well taken. For now, let's take a break. We come back. Interesting. Ashwini Gujral has covered some of his shorts or all of his shorts for the current series. So that's an interesting bit as well. Sandeep Wagle would be an interesting BTST ideator as well. So talk about all of those on the other side of the break. Also get in some more thoughts from P Phani Sekhar. Get you that exclusive, ET Now exclusive story on Century Textiles. And of course, what dealing rooms are recommending in the session today. All of that coming up over the next 30 minutes. Stay tuned.
Welcome back. You're still watching Closing Trades right here on ET Now. Now, post the recent fund infusion by Kumar Mangalam Birla of over 600 crores, Century Textiles may shortly consider a proposal to restructure its cement operations. Yatin Mora joins us with details on this $1.5 billion restructuring and its impact on minority shareholders. Yatin, break it up for us and for the benefit of our viewers. What is this investment banking proposal in front of Century Textiles board as of now? What's the structure looking like, and what is it that they're proposing?
Well, Tanveer, what we are gathering from our sources is that advisors as well as investment bankers to the Century Textile boards have proposed a value unlocking proposal in which they will be looking to hive off their cement business into a separate subsidiary or a separate company, which will be formed by a demerger as well as hiving off the cement operations, which are currently 13 million tons in capacity. They have recently commissioned good capacities in West Bengal as well as in Maharashtra. And if you look at the total valuation that the cement business is pegged at is close to 10,500 crores. And what we are gathering is that once the hive-off happens, the ideal situation or the ideal thing for the group would be merging this cement asset into Ultratech Cement. And post this merger, the shareholders of Century Textiles, apart from owning the real estate as well as the textiles business, would be getting shares into Ultratech Cement. So this is how the deal will be shaping up according to our sources. Of course, when we contacted the Ultratech Cement and the Aditya Birla Group, they declined to comment on the story. And when we contacted Century Textiles, they have yet not responded to our email queries.
Just a bit on the valuations, Yatin. What value could the deal be done at? Keeping in mind what the 2 or 3 recent cement deals have, because I look at the market cap, it's a fraction or at least half of what just the cement biz valuation could be.
Well, Neeraj, if you look at Century Textiles, that is the oldest Birla listed company which is there, and clearly we have cement capacities which are coming up at almost 13 million ton per annum. That is, the projects are getting completed. If you look at the last deal which Ultratech did with JP, that was for a consideration of close to $140 per ton, and if you look at 10,500 crores, that comes in at a cheap $130 per ton in terms of the enterprise value. Of course, we do not know at this point in time what will be the share swap ratio, clearly because there is some debt which is there on Century Textile that may get transferred to Ultratech Cement if the transaction really happens. But if you look at Grasim, earlier they had a transaction in 2004 with L&T, wherein L&T demerged its cement operations, put it into a separate company called Ultratech Cement, and then Grasim took that over, and the shareholders of L&T got shares into Ultratech Cement. So this was some kind of a restructuring that happened with L&T, and Ultratech was there post the Grasim also putting their cement business into Ultratech. So clearly it's a group restructuring, and possibly if you look at the valuations, that only and only get unlocked if the cement business is demerger, and it will be a win-win for the minority shareholders as well as the promoters of both Ultratech Cement, because there will be no cash consideration for the deal. There will simply be some kind of a dilution, and on the other hand, promoters will get access to this rich 13 million ton cement capacity, which will help Ultratech grow their cement capacities, which they are already doing via inorganic routes.
Thanks a lot for that, Yatin. So that's Century Textiles marginally up. I think 3.5%, if I'm not wrong. It was, at least at the start of the show, the best performing F&O stock, still up 3.5%, while the broader markets have gone off a little bit in the session today. 567 on Century Textiles. It's actually come off a bit from the highs that it clocked in a few days back. I think it was trading at 590 or 600 odd. But this, if this happens, is a fairly interesting deal for Century Textiles. It could actually do wonders for the stock price as well. So do watch out. If this happens, this will be that will be an interesting one. Though I'm just wondering, Sandeep, are buy calls off for now on stocks at large and therefore on Century as well, or would you trade this one?
Neeraj, I would take it as a trade because I am seeing some traction. But if for a limited upside, and there is a chance that the buy calls may fail, but the Nifty is likely to move sideways for some time. So you may have individual stocks performing ahead, buy in the morning, and I maintain my target of 590, 595 in Century. But broadly, I would prefer to go short or remain short, and specifically more stocks in the banking space.
Okay, fair enough. Just come in on this, Phani, because we're talking about, again, with this hive off, the focus comes in on the potential of the business for the cement side and, whether the cycle is turning around there, because from a valuation perspective, there seems to be some upside. At 10,000 crores enterprise value, what does this leave for investors, given that there would be then comparisons to listed entities such as Ultratech Cement, ACC, Ambuja?
Well, if the deal goes through according to the contours described by Yatin, then it's a fantastic deal both for Century minority shareholders as well as Ultratech, because at $130 to $140, that is EV per ton, I think it's one of the relatively more attractively valued deal as far as cement is concerned, because you have companies with much smaller capacities going at valuations which are 20 to 30% higher than this. So around 13 million ton per annum, and it will be handy for Ultratech also, which is planning to expand. More importantly, if it goes through at $130 to a ton, I guess even Ultratech shareholders will be benefited because it will be lower than the Ultratech valuation. So it's an all-round positive deal. And considering that we are at the trough of the investment cycle, as things improve, relatively more attractively valued cement assets will do better than those which have already run up in expectations of things happening.
And linking that question to the turn in the investment cycle, there's been much focus on road project companies, construction companies. Is that basket also of lure for investors at this point?
Well, it is, but it's a function of how long is your investment horizon. Because with the land acquisition bill going into some kind of a cold storage, I don't think it will be passed before the monsoon session. The massive allocations that have happened to infrastructure may not really fructify on the ground. So if you are an investor who is patient enough not just to hold but also to get into these stocks and have a time horizon of 2 to 3 years, then on declines you can selectively look at this entire infrastructure basket. But considering that many of these stocks had run up very steeply, I expect a correction first and then some kind of consolidation before fresh long-term investors get into this.
Today we had Vineet Nair, Phani, of Tech Mahindra, coming and speaking about how he believes that Q4 might be a different picture, and he can't quite give us a pulse of what that quarter might be. But he's fairly bullish, or reasonably bullish, on how FY16 will pan out for the IT space at large, or at least for their company. What's the call now? Because a bunch of these mid-cap IT companies have come out and given some warning bells.
That's right, and it's actually unusual. I have not seen this kind of consensus concern, if you may call it, over a particular quarter's numbers by so many companies. But all of them have uniformly expressed the hope that this is a one-off quarter or maybe a couple of quarters, and beyond that there is no damage to the structural trend. And I would like to believe that, because nothing like that seems to be on the horizon. Currency is supportive. If at all, currency will depreciate a little bit more. Growth rates are impressive in US, and euro is also coming from the bottom. So I have no reason to believe that if you'll take a 4 to 6 quarter view, at least for the IT services companies, especially the large caps, that there is reason to worry. So I think I'm fairly positive on this and advise investors to look at them positively.
Okay, let's get you a quick perspective what dealers are suggesting in the 10 minutes, 15 minutes of trade left. And Darshan Yathin has been getting a sense from their sources on what's buzzing on the street. Darshan, start off with you. What are you hearing?
See, overall, the trend for the market looks a little bit subdued. It's March ending, so probably a lot of trades are not happening. People are holding off positions until the next series. Overall, the general trend for the market is not on the bullish side. They believe that the market can consolidate even further. Stock-specific, Amtech Auto is down in trade, and dealers are recommending shorting this counter on the basis of technical trends. It's down close to 6%. They see that more selling pressure could probably come into this counter. BHEL is also down in trade. Dealers have indicated that domestic mutual funds are active sellers in the counter. So BHEL is something that dealers are watching out for. And two stocks on the long side, maybe for a positional trade, Sun Pharma, Advance, as well as Sun Pharma. Both of them dealers recommend to accumulate these counters. Dealers have indicated that management had met several major investors and gave them a good vision for the company for the next 3 or 4 years. So at lower levels, dealers are recommending accumulating both these counters.
Fair enough. Thanks for that, Darshan. Yathin, come to you. What are you hearing from your sources?
Tanvir, let's talk about big boy Reliance Industries, and that stock is clearly under pressure. Of course, falling crude prices and other inventory-related adjustments are happening, and that is the reason why there is no buoyancy in the earnings. And clearly, dealers believe that Reliance is one stock wherein a lot of large positions and investors have been looking to exit or liquidate the positions. So this is one stock wherein they are expecting the weakness to continue. Right now, almost down 1.5% for Reliance. Also, Aurobindo Pharma, of course, there was some kind of a FTSE rebalancing that happened in which there was a large chunk of shares to be sold by FIs into Aurobindo Pharma. So that is also one stock wherein dealers are recommending STBT based on FNO trends, wherein they are expecting the pressure to continue here. And in the cash market segment, dealers are recommending buying quality mid caps on dips. In fact, Kitex Garments is something that dealers are recommending as a buy on declines for a 15 to 20% kind of upside. Right now up almost 1%, but dealers expecting once the market stabilizes post this March month, there could be some limelight as far as few of these blue chip mid cap companies are concerned.
Interesting. Thanks a lot for that. Yathin, so do watch out for some of those names. This is what dealing rooms have recommended. The interesting one, of course, was Amtech Auto and the short idea there. Funny, auto component companies, darlings for all of calendar year 14, somehow for these last 2-3 months, they've kind of fallen off the cliff, say for maybe a Motherson Sumi or a Bosch or the large ones. The mid-sized ones have completely gone off the boil, the likes of Amtech Auto, etc. Never mind the big acquisition that they've done, whatever it may be. Somehow these companies have lost the mojo.
Larger trend remains there. And even if you dissect what is happening in that space, from a stock market perspective, companies that have stronger brands continue to perform well, and that fits in with the larger trend of brands doing well, whether that is in the FMCG space or in the consumer space. The businesses that are more B2B oriented, although they might have critical technologies to offer, they have not rallied, even though they have not corrected. So I guess that there investors are mapping what is happening to the OEM demand and replacement demand, etc. But the entire space, since it has rallied a great deal, from last year's level, this would have gone up by 200% in many cases. It's good that it is consolidating at these levels, because if you actually notice the OEM demand, it has not really gone through the roof. So the valuations at many of these places might be at least 4 quarters ahead of where they should be. And just like it is happening in the broader market, investors at some point will develop cold feet over valuations because earnings have to come through. And that is what I think can be explained in many of the broader segment of the auto ancillary space.
Where else would you think that the market is tired of the run-up? We've already seen the extended trade on pharmas. Do you think that has some more legroom?
I guess the market generally is wary of earnings, barring some sectors such as FMCG or pharma. And that, to some extent, at least from a fundamental point of view, is explained by the general consolidation that you see in the market. However, certain high beta sectors such as, say, real estate or maybe the infra space, which got excited due to various reasons, might see more steeper corrections than the other. But over the next 2 to 3 months, that is the Q4 earnings and more importantly the commentary of managements for the next year will be very critical in charting the path as to where they go, at least till the next 3 to 4 months.
Mm-hmm. Yeah, I must point out Supreme Infra. Viewers would remember the last 3 days I've been talking about it. A lot of chatter about the working capital cycle of this company, and it's fallen 11% today. It fell 10%, I believe, in Friday's session. If you look at the last 7-day chart of Supreme Infra, I believe it's knocked off almost 45 to 50 points or probably more. Bring up this last 7 days. There, 73 rupees gone down, and a large portion has really happened in the last 3 sessions, pretty much about when we started speaking about it. So let's wait and watch what happens to this one. 182, and it's lost 29% in the last 7 days. So while infra may be looking okay, certain pockets might be doing fine, this one is certainly not doing well. 182 and counting. Do watch out. It's all unconfirmed reports, of course. Remember that. There's no confirmation that we've gotten from the management or a report really. But the news were doing the rounds, and this stock somehow has fallen off the last few days. So keep that in mind. Supreme Infra is seeing pressure the last 3 or 4 sessions. The market, okay, 0.8% down. CNX small cap index down about 0.5%. So nothing terrible really from what was happening the last few days or what was happening in today's session. But select stocks are seeing some pressure. But just before we take in closing strategies, that one stock that really interests me, Tanvir, you remember Deven Choksi was speaking about this on closing trades in Friday's session, I believe, or Thursday's session, about buying into NTPC just before it went ex-dividend and for the debentures as well. And while it went down because it went ex-dividend in Friday's session, it's recovered some of the lost ground in today's trade, 3% higher at 150. So this one is not doing too badly for itself. Some of the energy names generally today are not doing too badly themselves. GMR has not had a bad day either, 2.5%, and I'm not comparing GMR and NDPC in any level whatsoever. But this one has gained quite a bit in the session.
You may want to address a flash actually on the screens. I don't know whether JSPL would react to this, but sources telling agencies, and this has been doing rounds in market circles over the last hour or so, of course, JSPL has recovered a bit from the day's lows. I would also attribute that to perhaps about a short covering ahead of expiry. But the coal ministry is expected to give the 3 or 4 scrapped blocks to Coal India.
Yeah, but this is again in line with what Anil Swarup told us. One of the 3 options that he has anyways mentioned, that it will either be re-auctioned or the third possibility that he had mentioned. This was the interview that he gave on Wednesday or Thursday to ET Now. When he mentioned the 3 alternatives, that all the blocks that will be cancelled, one of the options would be to give them back to Coal India as a custodian, so to say, or give it back to the states. But I believe what sources are telling the wires is that the 2 blocks that have been scrapped from Jindal Power, Jindal Steel and Power essentially, would probably be given back to Coal India, would be given to Coal India. So that's the update that we have as of now. Of course,
the option that JSPL would have preferred would be re-auction on the bids, which was also one of the options that he mentioned. I remember listening to that interview.
And I believe from what we've heard, they're also going to be challenging this in the higher authorities or the courts. So let's see how and when this happens. But this was one of the possibilities that Anil Swarup had mentioned about.
Not commenting on the stock because we need to, I'm just 10 minutes left, so we need to get in closing strategies. But do you want to just comment on this development? Because I think the market was working with the assumption that this problem would be sorted out, that Jindal Steel would be able to find some sort of common ground with the government in terms of getting a re-auction bid for these blocks. It was critical for JSPL, Phani.
Well, I'm actually surprised that instead of re-auctioning, if they were to go to Coal India, because the entire architecture of this auction was to cater to user-based industries. So let us wait and see, and more importantly, what JSPL has to say in court in its defense.
Coal India, that's the other one. I don't know whether it's seeing a bit of a sentiment pick up on the stock or reaction come in. That one has had a decent session. It's picked up a bit in the last 2 hours, but not a whole lot. 370, just about in the green. Let's get in closing strategies and from both our guests. Ashini, come to you first. What would you recommend in the 10 minutes left?
See, SBI is a sell with a stop. say around 280, look for targets of 265. It's actually gone below the intermediate lows it made with the Kejriwal rally. So basically, it's a fresh downtrend on SBI.
Sandeep, what about you? Your top closing strategy?
The bank nifty has broken 18,500 and I think the move towards 18,100, 150 has begun. I would go short in the ALBK, Allahabad Bank, 99.50, 99.60 trading in futures with a stop loss of 101 and target of around 93.94.
Interesting. A short on ICICI Bank at the start of the show, a short on State Bank of India. So banks probably looking vulnerable technically. Keep that in mind. 312. So that is trading close at the low point of the day as well. State Bank of India is trading close to the low point of the day. And this is, remember, the government preferential allotment or the preferential issue to the government happens at a price of 296. So assuming that goes through, whenever it does, it's actually happening at almost a 10% premium to the existing price of State Bank of India. So that's the bit. On PNB too, I believe in the morning we were talking about the news of the preferential allotment happening to the government at 196. Those were some unconfirmed reports. SBI, of course, it's known. It came in last week about the price being at 296. So this is fairly interesting. Ashwini, you mentioned that you are covering your short positions for the March series, but you're initiating fresh shorts on the banking space. ICICI Bank at the start of the show, SBI right now. Why so?
Because I'm not allowed to carry the March series into April, and hence you want to get into the April series post some sort of a rally, which generally happens on the first day of a series and on the last day. Whenever you are in a downtrend, sometimes you tend to get a couple of good up days. So that would be a better position to enter the April series rather than today.
Fair call. Now, funny, two of those things. One is, even private banks like ICICI Bank getting hammered really. I mean, at the start of the year, we got a lot of reports from people saying that Indian banks are the place to be in. Private banks could actually give returns of 30-35%. Adjusted for the split, ICICI is now back to 1,500 or thereabouts. It's certainly not showing the signs of the stock that could give a 35-40% return from the levels of about 360, 370 odd, remember.
Well, that initial exuberance of 35% might be a bit too much, but I'm not too overtly concerned by this correction. It's healthy, and if at all, it's an excellent buying opportunity because none of the broader metrics has changed. So earnings trajectory still looks okay. The valuations were good, reasonably good. With correction, they have become more attractive. So I don't see why anyone should be too concerned with this correction. If at all, it's an excellent buying opportunity. Yeah, you can debate on whether it's a 35% return potential or 25%, but as long as you make any of those numbers consistently for 5 years, I can assure you that you would beat the market hands down.
Okay. The other one is, I don't know if you've looked at Supreme Infra at all. I was just talking about it. The QIP at a much higher price, currently at 180. For people, investors who got into the QIP or thinking that the QIP price was the fair price and all, they are really sitting on a handful of loss that has come in the last couple of months itself. It's very sketchy, funny, to pick out a nice infra company right now. Would you primarily use the debt that a company has as the benchmark if you're investing or choosing any of the infra names right now?
Well, nice infra is an oxymoron. There is nothing really so
relatively nice.
Yeah, relatively safer.
No, but what I mean is funny. I mean, we've heard conversations about how a Sadbhav or a KNR or a few others which are not so leveraged or indebted could be interesting plays. Now, which is why my question was that would you look at the indebtedness of the company as the base criteria for choosing an infra name right now, if you are choosing one?
So, if you restricted it to an academic level, then there are two criteria. One is indebtedness to really see whether this company will survive the next cycle, and B, valuations to understand whether any investor can ever make money in any of these stocks. I think, unfortunately, on both the parameters, a large number of companies fail in the infra space.
You didn't mention management, quality of management for some of these names.
Even if you have the best management,
you'll be meeting a lot of them.
True. So I will not comment on managements, but just to leave you with what the great Warren Buffett says, that even a good management running a bad business usually can't turn around a bad business.
Yeah, these businesses, at least some of them at least have faced some pressure for sure, but the strong ones are doing okay. Supreme Infra right now is at 176 now, 13.5% off. So there's something happening in the stock. We're just merely pointing out what the market rumors are, but certainly something happening for the stock to be sold off the way it is getting sold off right now. Not a bad sign. That's probably one reason why the Amtech twins are also facing some problem. They are good companies. They're making some interesting acquisitions, Amtech Auto especially. But the debt problem is certainly there. At 132, Amtech Auto is now about 15 points adrift of its 52-week low. And this is one of the largest auto component plays in the country. It must be the fourth or the fifth amongst the top 5 largest auto component plays in the country, unless I'm very wrong. But it is actually trading close to 52-week lows, whereas stocks like Bharat Forge, Motherson Sumi, etc. are actually trading very close to or just about 10-15% shy of life highs. So that's the difference or the dichotomy that is there between a Bharat Forge, Motherson Sumi versus some of the others which are actually grappling with debt problems. So do watch out for this one. Interestingly, KPIT Tech to Tanveer is now trading at the low point of the day. So after that brief bounce in Friday's session, this one is resuming its lows on those guidance of a very flat Q4 for itself.
Yeah, it'll be interesting to see where the actual numbers come and what they spell for the future. But KPIT Technologies, big adjustment price-wise, 6.5% down in the session today. Let's start winding up the market. Last couple of minutes, and you have the index closing just at 8550. Looking a bit vulnerable to tomorrow's session opening and how things pan out there, given the volatility that there would be either ways because of expiry. The mid-cap and the small-cap indices also, a shade darker in the red for both these broader names, broader indices. Among the gainers, NTPC, and that one is the prominent gainer on the index, 3% higher, followed by Hindalco, 3% up. M&M, Sesa Sterlite, it's a day that's belonged to commodities, if I could just put it like that. Sesa Sterlite is the other one. There's M&M, which is gained. GAIL has done well for itself. And then, of course, you have Hero MotoCorp, ACC, ONGC, which have managed to make gains of about 1%. Having said that, on to the losers, and JSPL must be said. I mean, there's still, the government needs to still decide on the Tara block, on who to allocate the Tara block. I think the Gare Palma blocks, the decision, sources say, has been taken to, give those blocks to Coal India. But as we wait more clarity, Jindal Steel, from the lows of the session, I think a 12% fall at the start of trade. From there, that's a 7% recovery, 6% actually, and that's fairly noticeable. That could be on account of short covering, given the kind of pressure the stock has witnessed over the last couple of sessions. BHEL, Tech Mahindra, Ken, these are some of the other names which have fallen in trade. And then there's NMDC, which on the back of the new mines bill, on expectation of royalty payments increasing, this one is facing some pressure. Some of the private banks and PSU banks have also been under pressure. Reliance Industries at 845. So no, there's not much respite coming in among the large caps for the index.
Okay, now I want the intradays of some of the stocks that I'm going to speak to come about. We've kind of wrapped the market, but the intradays of some of these stocks. So look at Geometric Software. In the last 30 minutes of trade, Geometric Software inched up massively. It ends the day 14% higher. ENIL, standard disclosure, it's a group company, but in the last 30 minutes, it's gone up and nudged levels very close to its 52-week highs as well, 736 or 37. So a sharp uptick in the last few minutes of trade. Blue Dart, we've been talking about 4-digit, 5-digit stocks all through the morning session today, about how some of these stocks are still getting bought into, never mind in some cases expensive valuations too. But Blue Dart has shot up 7750, up 7% today. So that's the other one which has had a big move in trade. What's come off, aside of course, I think Supreme Infra, is also, I think, J Kumar. It's a relatively strong stock. I'm not comparing the two, but J Kumar Infra, I think in the last few minutes of trade came off quite rapidly, so down 10%. So do watch out for that one as well. That's an interesting play. But these are amongst the top movers in the last few minutes of trade. I'll come to Ashwini Gujral on Blue Dart in a bit, but understand we have to thank Phani first. Phani, before we thank you, what's the favorite pharma theme. And the reason I come to pharma right now is that it's been the strongest sector. Friday gave a bit of a rude shock to some people, the way a Spark or an Ajanta or some of the others cracked massively. A couple of them may have come up, but otherwise it's now just shaken up a few investors. I heard a number of calls and tweets as well about what was happening on that day. What's the call on mid-cap pharma?
Continue to remain bullish there.
Okay.
However, there are all kinds of stocks in mid-cap pharma. Even the better performing mid-cap pharma stocks have valuations that are far, far ahead of fundamentals. So to that extent, I will not be too surprised even if they correct by 20%. Not to say that they would, but even if they would have corrected. But other than that, typically stocks that have excellent prospects for them over the next 2 years or so, where there is margin improvement likely and valuations reasonable at around 15-16 times, very few of them. Those are the kind of mid-cap pharma names that you would like to associate with.
It's like a needle in a haystack right now, and the haystack is not fairly large. Interesting. You could say that's fairly large too, if you look at the run-up that some of the pharma companies are giving. But Phani Sekhar, so good having you. Thanks so much for joining in, Phani, and giving us your views. Okay, final thoughts from our experts. Ashwini, how do you map the day's trade? And I also want a view on Blue Dart, which just shot up in trade. I believe it's been a portfolio recommendation a number of times.
See, Blue Dart above 78.